Hi, good evening. Welcome. We're glad you were able to take an hour of your very busy lives to join us this evening. I'm Alyssa DeFilippo, Parents Helping Parents Program Manager for Connections California. Welcome if you're a repeat viewer to the Connections California screen, and thank you for coming if you're new. So this evening you are worried about losing public benefits while working? Our presenter this evening is Patricia Quinn, known as Tish to her friends. She has been helping people navigate work and benefits since joining the Department of Rehabilitation in 2016 as a credentialed work incentives planner. She has guided countless individuals in understanding their benefits, how to navigate work incentives, and confidently transition into employment. Now a Social Security specialist at DOR, Department of Rehab, one of Patricia's roles is to provide training and support to work incentive planners across our lovely state of California, ensuring that DOR consumers have the tools and knowledge they need to make informed decisions about employment and their financial goals. So again, we thank you for being here. And as I think we said, all our programming is free. So if you're so inclined, at the end of the presentation, I might be dropping a link to a donate button. No donation is too small. So we appreciate your coming. Thank Beatrice for being here, our Spanish interpreter, and certainly thank you, Tish. And I will turn it over to you.
Right. All right, let's see. Got a few buttons here that are coming up. Replace current, should allow. Oh. Good evening, everyone. I'm just kind of moving some things around. Zoom is always kind of tricky, but good evening. Thanks so much for that introduction, Alyssa. I'm happy to be here tonight to help discuss disability benefits and employment. I know there's a lot of questions. It's a complex topic, and I hope to clear up some of the confusion about going to work while on benefits. Many people are confused about whether they can work or can't work while they're receiving SSI, Supplemental Security Income, or SSDI, Social Security Disability Insurance. And the short answer is yes. Social Security wants you to work if you can, and there are programs in place to help you transition into a job without suddenly losing the benefits you rely on. You can work, earn more money, and still stay connected to your benefits as you move toward financial independence, but it's important to understand the rules. So tonight we're going to break down some of the most important topics related to Social Security benefits and working while on SSI and SSDI, and then hope to answer some of the questions with the time remaining. We'll start by briefly going over the key differences between SSI and SSDI, discuss the key work incentives that protect your benefits, and then we'll address some of the common myths and fears that often prevent people from moving forward with their work goals. Many individuals and their families worry about losing benefits, but the reality is that there are a number of protections in place to help you work, earn more, and keep necessary healthcare coverage. So by the end of today's session, I do hope that you feel more confident about how to make the most of your income and where to find free, reliable benefits planning support. This way, you'll clearly understand how your benefits may change and what supports might be available before making any decisions. All right, so to begin with, it's really important to understand the differences between SSI and SSDI. Right? It's important because you really need to understand what are the right work incentives given your situation and the benefits that you're receiving. And you want to be able to follow the specific rules for your program. So Social Security has two main benefit programs for individuals with disabilities: SSI, Supplemental Security Income, and SSDI, Social Security Disability Insurance. So SSI is a needs-based public assistance program funded by the General Tax Fund, and it offers cash assistance to aged, blind, or disabled individuals with limited income and resources. To be eligible for SSI, resources for an individual have to be under $2,000, or $3,000 for a couple. SSI payments can vary month to month. They fluctuate based on other income or your living arrangement. And recipients automatically qualify for Medi-Cal immediately. SSI is paid on the first of the month. All right, now shifting over to SSDI, we call that a Title II program. Okay, there are three main types of SSDI benefits. SSDI is generally for people with disabilities who have worked and paid into Social Security through their taxes. Under SSDI, you can be a disabled adult child or childhood disability benefit recipient. Okay, this helps adults whose disability which began before age 22, and their benefits are based on a parent's work record. So these benefits may be available if a parent is receiving SSDI themselves, retirement benefits, or has passed away. And then lastly, disabled widowers benefits. So you can be an SSDI recipient if you're a widow or widower between the ages of 50 and 60 who were married to someone who qualified for SSDI. So these programs provide financial support based on someone's work history. Either your own work history, or as a disabled adult child or a widower, a family member's work history. And the amount of SSDI a person can receive is based on that worker's individual past earnings. So in addition to having that cash benefit, we've paid into Social Security taxes, we're part of that insurance program, you're also eligible for Medicare after a 24-month qualifying period. Because SSDI is an insurance program, there's absolutely no resource limit. So we don't have to worry about how much money we have in a bank when we're on SSDI. So the key point here is really that SSI and SSDI are separate programs with very different rules for work and earnings. And so it's important to know which one you're receiving so that you can take advantage of the right supports. And keep in mind, it is possible that someone's receiving a little bit of both, a little bit of SSI and SSDI. All right. Now that we've covered the differences between SSI and SSDI, I want to tackle some common myths and misconceptions. These can create barriers to work, and I want to highlight some of the key work incentives that protect your benefits as you explore employment. The three most common concerns we hear as benefits planners are: if I go to work, they're going to take my cash benefits away. If I go to work, I'm going to lose my Medicare and Medi-Cal. And then lastly, if I go to work and I'm successful and I move off of my benefits, I'll never be able to get back onto my benefits if I need them. So good news, these are all just myths. Social Security has built-in protections to help you explore work opportunities at your own pace without risking your benefits. So let's dive into some of the facts and take a closer look at a few of these programs. All right, so myth number one: if I work, I'm going to lose my cash benefits. So clearly, right, we've become dependent on these cash benefits to help us survive. So it's only natural that you would be worried that you would lose that cash benefit or that support. But it's not true. So Social Security's work incentives actually let you try working while keeping your benefits, providing security and support along the way. And these protections can help you earn more while staying connected to the benefits that you need. Okay. So what are work incentives, right? Work incentives really are just special Social Security rules. Okay? They're designed to incentivize you giving work a try. So these rules really are intended to help you work without suddenly losing your benefits. They allow you to keep some or all of your SSI or SSDI benefits, including your health care, while you're working. We don't really have time to cover a lot of the details, but DOR does have, and I'll share with you our website a little bit later, we have recorded webinars that go into detail on SSI and work and SSDI and work. But for tonight, we're just doing a quick overview. All right, so this is just a partial list of some of the work incentives that are available to help you transition to work at your own pace. For SSI, the work incentives really are focused on excluding some of your income so that you have more money when you work. Social Security actually counts less than half of a person's earnings, ensuring you come out ahead financially. So some of the common SSI work incentives include a student earned income exclusion. This allows students under 22 regularly attending school to exclude a significant amount of earnings to keep more of their SSI payment. While impairment-related work expenses allow disability-related expenses to be deducted when calculating income to maximize the SSI payment and help cover those expenses. And Social Security has special exclusions for people who are blind, helping to maximize that SSI payment when working. There is a plan to achieve self-support. We call it the PASS plan. And this helps beneficiaries on SSI exclude some income and save money for work-related goals without impacting their SSI. And then lastly, we have continued Medi-Cal coverage, a rule that a lot of folks are not familiar with. Okay, it's a special rule that lets someone who is working keep their Medi-Cal coverage. Okay. Now, with SSDI, that program works differently. SSDI work incentives generally come in phases, acting as safety nets that keep you connected to benefits while you test your ability to work. They allow you to gradually become self-supporting over a period of time. So the first phase is the trial work period. This allows recipients to test work for 9 months while keeping their full SSDI benefits. After the trial work period, the extended period of eligibility provides a 3-year safety net where benefits are protected and you can stay connected to your SSDI while you're working. Okay. Two common supports for SSDI recipients are the impairment-related work expenses, again, which allow disability-related expenses to be deducted from those gross earnings so that it reduces the amount of income Social Security counts. And we have subsidy or special condition. Okay, so a subsidy is just extra support someone might get from their employer, while a special condition is help from someone like a job coach. So Social Security lowers that countable income by subtracting the value of that extra help, making sure that the earnings reflect the work that's actually being done to help you keep your SSDI payment. And then finally, both programs have expedited reinstatement. Okay, this is a quick way back onto benefits if your benefits have ended due to your work and earnings. And SSDI has a special provision for continuation of Medicare long-term. Right? So since SSI and SSDI have different work incentives, there is some overlap, but generally different work incentives. It's really helpful to work with a work incentive planner or a benefits planner who can help match the right program to your situation so you can make the most of your benefits while you're working. All right, let's take a quick peek at how SSI calculates your SSI payment. Right? So how work affects your SSI payment. The SSI monthly benefit check is calculated in part based on what other income you have available. So generally, as your earnings go up, your SSI is going to go down. All right? It's a supplementary program. It's meant to supplement your other income. So if you use any of the SSI work incentives, Social Security won't count some or all of your income when you work. This helps for you to maximize that SSI payment. There are a lot of things to think about when it comes to your SSI payment, and this slide is simplifying things, but it is a good way to start understanding Social Security's formula when they calculate your SSI payment. They calculate that SSI payment every month. If you have no other income, that payment remains the same. As you report income, whether that's unearned income, perhaps you have trust fund, or you're also getting SSDI, or you are on veterans benefits. Okay, that's considered unearned income, and that is not part of this simple calculation tonight. I want to be very clear that this calculation is only calculating income that is earned. Okay, so generally speaking, SSI is going to reduce your SSI payment by subtracting part of your income from that SSI payment. But here's the good news. Social Security doesn't count 100% of your income when they determine how much SSI to pay you. Okay. In fact, they count less than half of your wages, which means that even if your SSI check goes down for the month, your total income will always be higher when you're working. And another important consideration is that SSI has a safety net to help you stay on your benefits, even if your SSI is reduced to zero because of your work. Okay. If you're getting the full amount of SSI in California, which is $1,206.94, you can earn up to over $2,400 before that SSI is reduced to zero. Okay, so it really is based on what rate your SSI payment, and there are a number of categories for SSI payments. So again, this is just a simple calculation. It doesn't include any extra work incentives or other types of income. Okay, so as I mentioned, the more you earn, the lower your SSI check will be. In general, Social Security is going to look at your gross earnings, which is the total amount you earn before taxes. In this example, we're using $1,000. Then they're going to exclude the first $85. It's not counted. This is considered a general and earned income exclusion. It's $85. 1,000 minus that exclusion of $85 is $915. Now, Social Security is only going to count 50% of that remaining amount. So $915 divided by 2 equals $457.50. Social Security is going to reduce the SSI by that countable income of $457.50. Clearly, we've earned $1,000, but our SSI is going to go down less than 50% of what our earnings are. So you're always coming out ahead. Okay. If in this example, we had used other work incentives like the student earned income or the blind work expenses or the impairment related work expenses, that would further reduce that countable income, increasing our SSI payment for the month. Okay. All right. Now that we've covered sort of some key concepts, let's take a look at some real-life case examples to see how SSI rules and work incentives apply in different situations. First, we have Hema. Hema is 28 years old. She receives a monthly SSI check of $1,206.94. That is the maximum amount here in California. Right? She lives with her parents and pays rent. She wants to work part-time, about 20 hours per week, and she has no other income. Her estimated earnings per month are $1,385. So, based on the SSI formula, her income reduces her SSI payment to $556.94. She earned $1,385. Okay? So even though her SSI payment has gone down to $556.95, when we add that to her earnings from work, we can see that she's bringing home over $700 more each month compared to her SSI alone. Her reduced SSI check of $556.94 combined with her earnings from work of $1,385 leaves her with $1,941.95 for the month. Okay, now she can continue to work at this level indefinitely as long as she remains eligible under SSI rules. She continues to have a disability. She has no other income, so we don't have to worry about that, but her resources remain under $2,000. Right? So as a benefits planner, it would be my obligation to work with Hema and her family to understand where they can safely save for the future to keep her resources under $2,000. Okay. Case number 2, manual. Okay, so we're looking at this situation. I really want to kind of bring in the student earned income exclusion. So in this example, Manuel is 19 years old. He's receiving the full amount of SSI for California, $1,206.94. He has no other income. He lives with his parents and pays rent. He's receiving in-home supportive services through his Medi-Cal. He attends his school's adult transition program, and he's going to be participating in a paid work experience, earning $710 a month. So what's going to happen to his SSI? The great news here is a student earned income exclusion is a golden ticket. Okay. In 2025, a student under age 22 who is regularly attending school can exclude up to $2,350 per month of income, up to a maximum amount of $9,460 annually. In Manuel's scenario, he's earning $710 extra each month. Okay. His benefits planner suggested how he could request that student earned income exclusion. So Social Security is excluding the entire $710 from the SSI calculation. So for now, he gets to keep his full SSI payment of $1,206.94 plus the full earnings of $710 per month, bringing his total income to $1,916.94. Again, over $700 more each month by working. Okay. Yes, I know that I've simplified these, but I hope that they provide a good example of how the work incentives help to maximize the SSI cash benefit. All right, that's a quick glance for SSI. Okay, now let's take a look at SSDI. So really, when we look at SSDI, there's primary work incentives designed to help people transition to work over a period of time at their own pace. And that's the good thing about SSDI. Now, SSDI is an all or nothing program, meaning there is no fluctuation in the amount that someone would receive each month. Okay, so first, we do have to use these work incentives sequentially. Okay, and you can't move on to one until you complete the other. So first, we have a trial work period. Okay, this is a good time to test out work risk-free. You get 9 months within a rolling 5-year period where you can earn any amount and still receive the full SSDI benefit. In 2025, any month that you earn over $1,160, that's going to count as one of your trial work period months. If you earn less than that amount doesn't count and it has no impact on your benefits. So during the trial work period, you keep both your SSDI cash benefit and your earnings from work. So after completing the 9th trial work period month, you move into the extended period of eligibility. Okay, this provides a 3-year safety net where Social Security is going to watch your earnings, and they're going to measure that against what they call substantial gainful activity. So substantial gainful activity is really one of the basic requirements that Social Security looks at to be eligible for disability benefits. So if you have a severe disability and you're unable to work and earn substantial gainful activity, which is defined by an amount of money, and that your disability is expected to last for at least 12 months or more, right? You become eligible for disability benefits. Now, when you've been on benefits for at least 12 months, now you have access to these work incentives that protect you from losing your benefits right away. And now Social Security is going to measure your earnings each month to see if you're able to work and earn that substantial gainful activity amount. That's defined this year as $1,620, $2,700 per month for a blind individual. Okay, so as I mentioned, SSDI is an all or nothing program. During this 3-year period of the extended period of eligibility, any month your countable earnings are below that SGA amount, your SSDI payments will continue. During the extended period of eligibility, if your earnings are above that SGA amount, The cash benefit is suspended for that month, but can be restarted anytime your income drops below SGA within the extended period of eligibility. The first time you exceed the SGA level, you still get 3 more months of your SSDI payments, and they call this the grace period. So eventually you're allowed to try work for 12 months, if you will, to keep that SSDI payment. And then any month your earnings are above SGA, again, that's $1,620 this year, your SSDI payment is going to be suspended for that month. Okay, Social Security you'll be reporting your wages, and Social Security will determine each month whether you're eligible to receive that check. Once you finish the 3-year extended period of eligibility, your benefits will continue if your earnings are below that SGA amount. If they're over that SGA amount after you get through the extended period of eligibility and you've used your grace period and you've used your trial work period, earnings are above SGA, your benefits can be terminated or ended. Okay. Now, we have a lot of people who worry that their benefits are going to be terminated permanently. And the good news here is that there is the third phase of protection called the expedited reinstatement. If your benefits end because of work and earnings, you have 5 years to go back onto benefits quickly if you have to stop working because of your disability. Social Security will give you up to 6 months of temporary benefits while they review your case. All right, now I know this has been a lot of information. Let me break it down into a few key takeaways. The trial work period lets you try working without changing any of your benefits. The extended period of eligibility lasts for 3 years and helps you stay connected to your SSDI, whether you're receiving a check or you're not receiving a check. Your benefits can be restarted anytime. The expedited reinstatement will help you quickly restore your benefits if you can't continue working due to your disability. So these work incentives really give you over 8 years of protection while testing your ability for continued work. Okay, if the job works out, you're going to be financially better off. If the job doesn't work out and you have to stop working because of your disability, you can return to your benefits and be right where you started. All right, now you may be wondering, and I get this question a lot, how much can I earn without losing my SSDI benefits? Okay, now it's a common question, and I want to be sure that you understand that these work incentives are designed to help you move towards self-sufficiency, not necessarily work and stay on SSDI. However, when you understand the rules, you can sort of go through your employment opportunities at your own pace. And so maybe you want to start out working part-time. And then in a few years, you're feeling comfortable and confident and you want to go full-time. If you don't want to have any impact on your SSDI, keep your earnings below the SGA amount. The SGA amount changes every year. Again, this year, that amount is $1,620. So if you're earning $1,600, you're earning below SGA, you can do that and stay on SSDI benefits. Another thing to keep in mind is you can actually earn more than that if working with a benefits planner, we can come up with what work incentives you might be eligible for that would help reduce that countable income to back under that SGA amount. Okay, so beyond the trial work period, the extended period of eligibility, SGA, there are additional safeguards really to ensure that the support that you need is available as you're giving work a try. And again, a benefits planner can help you map out these phases and create a timeline to help you understand what's going to happen and when it's going to happen to your benefits. Now, based on what we just learned tonight, what do you think is going to happen to Keisha's SSDI benefit? So Keisha's 45 years old. She gets SSDI amount of $1,300 per month, and she's working part-time, earning $1,000 per month. So the good news for Keisha and her family, her gross earnings of $1,000 per month is below the trial work period threshold of $1,160. So there's absolutely no impact to her SSDI benefit. If she had used her trial work period in the past, which is possible, she's 45 years old, okay, her earnings are still below that SGA amount of $1,620. So in both scenarios, she keeps her SSDI benefits, her cash benefits, her health care, and her earnings from work. She can continue to work at this level indefinitely as long as she continues to have a disability. So Keisha enjoys getting out and working, and she's starting to save for the future. All right. So working here with Tom in scenario 2, Tom's 35 years old. He receives SSDI under the Disabled Adult Child or Childhood Disability Benefits. He reported wages for his sub-minimum wage for the past 10 years. He is going to be receiving job coaching to help him transition from his work activity program. Okay, so the first work incentive that we would look at is the trial work period. Now, Tom reported wages in a sub-minimum program for 10 years, so we would need to determine, did he use any of those trial work periods in the past? Or does he have access to all 9 moving forward? All right, so we would check to see whether he is eligible for any of those 9 trial work periods. Now, remember, during the trial work period, no other work incentives apply. So if he continued to earn $1,700 per month, he would use those 9 trial work periods consecutively. Now, after completing the trial work period, Tom enters into that 3-year extended period of eligibility. So during this time, he keeps his benefits if his earnings stay below that substantial gainful activity threshold, or if his earnings exceed that threshold, his benefits are suspended for that month. So since Tom is receiving job coaching, Social Security counts it as a special condition, and they deduct its value from his earnings. Okay? So he's earning $1,700 per month, working 25 hours a week, earning $16 an hour, and he's receiving a 50% job coaching. Social Security calculates the value of that job coaching as $850. So they're taking 50% of the $1,700, okay, reducing his countable income from $1,700 minus the value of the job coaching of $850. So his total countable income for this month now is only $850, significantly below that SGA level. So without this deduction, Tom's earnings would be too high to receive an SSDI payment for this month. He's still on SSDI in the extended period of eligibility. He just would not have received a payment. However, with the use of the work incentives, he keeps both his SSDI check and his earnings from work. And then additional work incentives could apply if he had any impairment-related work expenses, right? We might be able to reduce that countable income even further. Right? So these additional work incentives really help him to stay financially secure while he gets a handle on working. Now, once that 3-year extended period of eligibility would end, Tom's benefits would continue as long as his countable earnings remain below that SGA level. Now, 3 years from now, we have no idea what SGA will be. It does increase annually. Okay? If his earnings go above SGA after the extended period of eligibility, his benefits may be terminated. And at this point, then he would have access to the expedited reinstatement as a quick way back onto benefits. So just a side note here, many families really worry that if their SSDI, Disabled Adult Child or Childhood Disability Benefit recipient starts working, that it could affect their own benefits. Okay, this isn't the case. So you can feel comfortable and assured that your benefits will not be affected. They will remain unchanged while the adult child explores work. All right, so now that we've covered work incentives, I hope you can see that the idea of automatically losing cash benefits when you go to work is really just a myth. Okay, the truth is you can work without losing your cash benefits if you understand the rules. So let's review some key takeaways here. For SSI recipients, Social Security counts less than half of your earnings, helping you keep more of your cash benefits. Okay? You can use income exclusions to reduce the countable income, and there are over 20 work incentives. Again, we just touched base on a few of them tonight. Okay? They allow you to keep SSI eligibility long-term, even when you work and your SSI is reduced to 0. They provide ways to save money through an ABLE account, which we're going to discuss here in just a few minutes. And remember, SSI recipients are will always come out ahead and be more financially secure when working. For SSDI recipients, work incentives, remember they come in 3 phases and you must complete one before moving on to the next. The work incentives are designed to help you succeed while you transition to work over a period of time. So SSDI work incentives let you try out work risk-free during the 9-month trial work period. You get to keep your full SSDI benefits. They offer ongoing protections through the 3-year extended period of eligibility and the 5-year expedited reinstatement. You can use additional work incentives to lower that countable income to help you keep that SSDI payment. And then there are other work incentives, as I mentioned, that might fit into your situation. You can stay connected to benefits while working, giving you the chance to earn more with the support you need as you work toward financial independence. And if your earnings stay below that SGA level and your disability continues, you can keep your benefits indefinitely. So really, these work incentives are designed to reduce your barriers, offer flexibility, and provide support. And they're meant to empower you to explore new opportunities, to get out and try work. Understanding how Social Security works really puts you in control of your benefits and your health care. All right. Now, the biggest question that benefits planners receive is really about Medi-Cal and Medicare. So let's discuss myth number 2. If I go to work, I'll lose my Medi-Cal or I'll lose my Medicare. So for many, losing healthcare is a much bigger worry than losing those cash benefits. It's important to know that there are options for continued healthcare coverage long-term for people with disabilities who work. Both SSI and SSDI offer programs to protect your healthcare coverage. With our SSI Medi-Cal recipients, there are 3 key protections to maintaining Medi-Cal coverage for SSI, okay? Supporting that long-term stability of working with a disability. SSI recipients automatically qualify for Medi-Cal, and as long as you receive any SSI payment of any amount, you continue to meet the SSI eligibility, meaning you continue to have a disability and your resources are under $2,000, you can keep that SSI-linked Medi-Cal, and it's possible to work and stay eligible indefinitely. All right, moving on, there's continued Medi-Cal under what's something called Section 1619B. Don't worry about the terminology, just know that this is really important for someone whose earnings are high enough to reduce the SSI payment to 0, and they would otherwise be terminated from SSI. However, under 1619B, you automatically qualify for continuation of SSI and Medi-Cal if your earnings stay under a threshold. This year, that's about $64,000 a year. Higher if you're a blind individual. So you can remain eligible for SSI and free Medi-Cal as long as you continue to have a disability, few other rules, and your resources stay under $2,000. So I'd be curious to know how many of you knew that you could actually earn over $64,000 and stay on SSI. Again, understanding the rules is key to keeping that Medi-Cal support. Now, another option that offers Medi-Cal coverage for individuals with disabilities who work allows earnings of up to $76,320 this year in California. But unlike the SSI linked or the 1619B Medi-Cal coverage, there is no resource limit, making it ideal for those transitioning off of SSI but needing ongoing Medi-Cal coverage. Okay. Now, with this program, you do have to apply through Medi-Cal, and it's best to probably just contact your Medi-Cal worker listed on your Medi-Cal verification paperwork and ask to be evaluated for the Medi-Cal Working Disabled Program. All right, so that's 3 provisions that can help someone receiving SSI keep their Medi-Cal coverage. Now, with SSDI, beneficiaries can keep their Medicare coverage when they go back to work through 2 programs. The extended period of Medicare coverage is automatic, and it allows for continued Medicare coverage for at least 93 months following the 9th trial work period. That is over 7.5 years of protection, whether you're receiving SSDI or not. Afterward, you are able to buy continued Medicare coverage as long as you continue to have a disability, and you can do that through Social Security. Now, SSDI beneficiaries can also take advantage of the 250% Medi-Cal Working Disabled program, again, applying through Medi-Cal. And under this program, Medi-Cal will pay your out-of-pocket expenses and your Medicare Part B premium, saving you $180 at least each month. All right? So if you're currently receiving Medicare and you're paying a monthly premium and your earnings are below $3,000 a month, you may be eligible for that Medi-Cal Working Disabled program. Okay? So as you can see, there are multiple work incentives that dispel the myth that you're going to lose your healthcare coverage right away when you start working. Now, again, a benefits planner can explain these options so that you can make informed choices. All right, quickly, let's address myth number 3. What if I go to work and have to stop working because of my disability? I won't be able to get back on benefits. Well, as you imagine, there's a work incentive for that too. And the truth is, expedited reinstatement allows people a quick way back onto benefits without having to reapply. So if for some reason your benefits are terminated and you find that you're unable to continue working at an SGA level because of your disability or one closely related to it, you can request expedited reinstatement. Social Security will reinstate your benefits quickly while they review your case. Okay? Now, where can I get help with benefits planning, right? So if someone is participating with the Department of Rehabilitation, you can ask your counselor to be referred to a work incentive planner at the DOR. It is that simple, okay? Generally speaking, if you're going to be working, you're in a paid work experience or an internship, or you've got a job, we want to be sure to meet with you before you start working so that you understand the rules and understand how to report your wages to Social Security. Okay. If you're not connected to the DOR, Social Security's Ticket to Work program provides free access to community work incentive planning and assistance programs. We call them WIPA programs. And some independent living centers actually offer benefits planning as well. So to get connected to a local WIPA program, you can go to Social Security's Choose Work website, choosework.ssa.gov, and you can access a Find Help tool to locate a local work incentive planning and assistance program. Or feel free to call the Social Security's Ticket to Work helpline to get connected with a referral to your local work incentive planning and assistance program, or any other kinds of employment supports. Another great resource I want to mention is the Protection and Advocacy for Beneficiaries of Social Security. Okay? This program is through the Disability Rights of California, and it offers free legal advocacy to SSI and SSDI recipients who want to work. It can help individuals navigate work-related challenges, understand their rights, and access the benefits and supports needed to succeed in employment. So PABs can assist with issues like workplace discrimination, reasonable accommodations, benefits planning, and addressing any barriers you may have to work. How can benefits planning help you? Okay, it can help you in a number of ways, and I've mentioned that tonight. So really, benefits planning is meant to help bridge the gap between receiving benefits and successful employment by offering clear guidance on how work affects your benefits. Okay, they provide personalized guidance to help people understand how work will affect their individual cash and healthcare benefits. Balancing work and Social Security disability benefits can be overwhelming. It's complicated, right? You don't have to do it alone, but benefits planners can break it down, showing how employment can often improve financial stability. They're going to help address any common fears and misinformation to help you transition to employment successfully. Develop any kind of plans. We call them benefit summaries analysis and work incentive plans. They're individualized and tailored to your individualized goals. Okay, it provides a resource or a map for you moving forward. They can also assist with wage reporting, financial literacy, and benefits management, making it easier for individuals and families to navigate work and Social Security's complicated rules. So really, by connecting people with the right tools and information, benefits planners can empower individuals to make those informed choices, fostering long-term stability. All right. Few great resources, and then we'll open it up to questions. Okay, Social Security has information on their website, ssa.gov. A couple of the resources that you will find really helpful. One, the Red Book. It explains all of the work incentives for SSI and SSDI. Okay? Then one of the most helpful resources is the Working While Disabled brochure, which really explains important information in a clear and easy to understand way. You can order any of your SSA publications online at ssa.gov/pubs, PUBS/. Right? And then I also highly recommend setting up a My Social Security account if you haven't done so already. And this is going to allow you to manage your benefits, report your wages, and more. Okay? So if you need help, we've got the Social Security's 800 number, although with all the changes going on at Social Security, I got to kind of wonder how responsive that's going to be, but we're going to stay positive. So you can call Social Security at 1-800-772-1213 to ask any questions, request verifications, or set up an appointment at your local office. Now, the ticket to work, choosework.ssa.gov is the Social Security Ticket to Work website, and it is full of fact sheets and information and monthly webinars and jobs clubs. And so I highly encourage you to check that out. If you need to get connected to your local work incentive planning assistance program, as I mentioned, they have a find help tool, or you can contact the Ticket to Work helpline at 866-449-2730 and ask for that referral to meet with your WIPA. And then at the Department of Rehabilitation, we do have our Ticket to Work helpline for our DOR consumers that we can provide some basic information and get them connected to our benefits planners. So if you have any questions about your DOR case or webinars or newsletters, you can contact us at 1-866-449-2730. We also list all of our webinars and newsletters on our website, dor.ca.gov/home/SSA. Okay, Disability 101 will be your friend. Okay, this was designed by the World Institute on Disability. It has got great information about, and I put the links here to SSI and work, SSDI and work, and youth and parents information. So a lot more information with very precise guidance where you can find additional resources on how working impacts your benefits. And then finally, the Achieving a Better Life accounts in California, we call our program Cal-Able. This is a great place for someone who is diagnosed with a disability before age 26. Next year, that will be expanded to 46, where you can save and invest without having it risk your public benefit, any impact on your public benefits, including SSI. All right. No, I know we covered a lot of information in a very short period of time. I hope it provides some clarity while working on SSI or SSDI. You know, it's not only possible, generally it's beneficial. So the takeaway today is that with the right work incentives, SSI and SSDI and employment can go hand in hand to support a path toward greater independence and financial stability. I say with that, let's go ahead and open it up for questions. Let me
Seems
go
to
in
be
and
a lot of confusion, Tish, about substantial gainful activity. I have put the link in, I put it both in the link and in the Q&A, but if you could just explain just a little bit, there were concerns about can you still get Medicare? You know, what are the Medicare rules around SGA? What about the 9 months and the 2 year and the 5 year that you were talking about?
there's three.
Just a little bit
Yeah,
of a
so
short review on that, I think would be helpful.
yeah, no, just a quick highlight. So SGA is basically an amount of money Social Security sets to be eligible to receive disability benefits. Once you've been on benefits for 12 months, that sort of drops to the side for a period of time. So SGA this year is set at $1,620. If you were to apply for Social Security disability today, but you were earning more than that, you would be denied. Okay. Now that you've been on benefits for 12 months, Social Security says, go try work. Now, this is only for SSDI, right? Go try work. We're not going to touch your benefits for 9 months during that trial work period. You can earn any amount you want. Okay. See if you're able to work. Following that night trial work period, though, we're going, and there's terminologies for this. We're going to now say, can you work and earn that SGA? Can work and earn SGA during that second phase called the extended period of eligibility. That lasts for 3 years. Really, it's designed rather than terminating somebody's benefits when they start earning over SGA, they say, we're going to give you 3 years. You're going to stay connected to your SSDI. You just may not get a cash benefit for 1 month or 2 months, depending on how much you're earning, right? So you get 9 months, it doesn't matter, you keep your SSDI. They say stay connected to your benefits for 3 years, no matter what your earnings are. You just may not get a check that any month you're earning above that substantial gainful activity amount, which is part of the definition of disability. It's an earnings amount that helps you either stay eligible or ineligible for a payment. So in 9 months, then we move to that 3-year phase. Once that 3-year phase ends, if your earnings are below SGA, you're just staying on SSDI. If your earnings above SGA after 9 months and 3 years, your benefits can be terminated if we can't pull in any other work incentives to lower the way they look at your wages. Does that help?
I think so. I think the repetition often helps. There were some questions about, can there be 2 9-month periods? If there's a 9-month period, they go back to work and then another 9-month period.
Great question. So you get 1 9-month period. However, having said that, if your benefits are terminated at any point in time and you use your expedited reinstatement, after you've used expedited reinstatement and you've received 24 monthly payments, you get a new trial work period. Okay, it's called an initial reinstatement period. So one trial work period, if you successfully work off of your SSDI benefits, and for some reason you use expedited reinstatement to get back on them quickly, after 24 monthly payments, you are eligible for a new trial work period and all 3 phases. So it's a yes, no answer.
Okay. A couple of questions about the transfer from SSI to SSDI and the DAC benefit and how that might affect work in general.
So it doesn't affect work necessarily. Social Security is required. SSI is the payer of last resort. So if you have worked or you become eligible for that disabled child benefit, they are required to move you to SSDI. If you're receiving a low amount of SSDI that is not at the same level as the California, like if you get SSDI and you're not at least at $1,206, they are required to supplement your SSDI with an SSI payment. So it has no impact on work. What happens though is it gets a little complicated to manage when you are working, because now you have access to both SSI and SSDI work incentives, and the earnings you earn, obviously there's two different programs. Then you have to report the wages to both programs. And then we really need to map out what's going to happen to the SSI and what's going to happen to the SSDI over that period of time. So getting one over the other doesn't affect your work, but your work may affect, obviously, the SSI and the SSDI a little bit differently.
Yeah, so you can understand why people just throw up their hands and say, why work? But that's what work incentive planners are there for. They're there to help you. And that is if you are a client of DOR already, and you don't need any kind of referral from a regional center to go to DOR. You can go to DOR directly. That was one of the questions.
You can apply to DOR through the DOR online website.
And I just want to draw people's attention to those evaluation links. I put them in again. I don't even have, 50% yet. So please click on it and give us a quick answer. It's 4 questions if you can. I have a couple of questions which are interesting about young adults or adults with disabilities who work for parents' companies. And they funnel money, annual income into a retirement account. How does that affect things? And should they be putting stuff into the ABLE account instead of, so how that's an interesting question.
Right. So now we're talking about resources. So if someone's on SSI, we have to be real careful about that $2,000 resource limit. An IRA account or a retirement account, 401k, any kind of liquid asset can be considered a resource. Now, if you're SSDI, they don't look at resources. So go ahead, keep putting the money where you want to put it. If you're an SSI recipient who was diagnosed with a disability before age 26, you absolutely want to work at a CalAble account. Anyone can contribute to someone's CalAble account. And you can actually save up to $19,000 a year, up to the first $100,000 in that account. Does not impact SSI, HUD, any kind of public assistance. So if you're on SSI and grandpa's putting money in some kind of an IRA for you, that can absolutely be counted as resource, and that's going to lower the amount of SSI you receive. If it's over the $2,000, the SSI is going to be suspended, which means the Medi-Cal is going to be suspended, and you're not eligible for either until you bring those resources back under $2,000, and you have 12 months to do that. So hopefully that answers the question. So SSI, significant, definitely important to understand where you're going to put that money safely.
Thank you so much. Thank you everyone for coming. And I put some links for upcoming events. We hope to see you again soon. Have a good